Hi, Dennis Jones is my name, Senior Advisor, Senior Financial Planner at CCA Financial Planning. I'm here today with Damien Butler, Accountant and Principal of Butler Chartered Accountants. We'd like to have a bit of a chat today about business growth and succession. Damien's accounting practice has a dedicated team focusing on business growth, the LIFT team, but also specifically the whole concept of business succession. Damien, from what I've observed, most business owners probably don't have an effective business succession plan in place. What's been your observation?
That's correct, Dennis. I think most business owners, particularly small business owners, haven't even thought about what is their exit strategy from their business. However, a lot of them are relying on the value of their business to actually help them in retirement. So on the one hand, they haven't got a plan, but on the other hand, it's their plan to retirement. So it's a big issue.
It's kind of crazy, really, because but you can understand it because business owners are so busy, but they can't stop and think about, take a helicopter view about, well, how do I, what's the value I have in my business, and how do I capture that value and perhaps get it into superannuation. From my understanding of the 15-year rule in relation to small business tax concessions, it's just a fantastic opportunity for business owners to ultimately sell all or part of their business in conjunction with retirement and get a big lump sum of money into super, tax-free.
That's correct.
Do you find people understand that?
Not many people understand it. There's certainly certain qualifications for you to access those small business capital gains tax concessions, but when you do qualify for those, they're big kickers for your retirement if you can get those in place. And that's why maximising the value of your business is so important in that retirement strategy.
Look, it is amazing, isn't it? I mean, if people owned a property, an investment property, or even their home, which is another major asset, if they were going to sell it, they would paint it, perhaps do the garden, present it well to maximise the value. But often in small business, this decision to sell is sort of a bit reactive and not planned.
Yeah. It's a good analogy that you make there, Dennis, because it even is more so in business, in that if you're improving the value of your business, you're essentially improving the day-to-day profitability of your business. And you're also decreasing the reliance on the principles of the business. So it's more like a business rather than Dennis's business or Damien's business. So if I sell my business is completely reliant on myself, it's really of no value to someone else. So by building that value into your business, you're taking reliance off yourself, which is not only good from a retirement strategy, but from a day-to-day management means that life's going to get a lot less complicated. It's risk management if something happens to you in the meantime. But on top of that, it should be improving your profits on a year-in, year-out basis.
Look, it's such an important issue, and the limitations that have been put on superannuation contributions, it was 100,000 concessional a few years ago, came down to 50 to 25. Now for older people it's back up to 35. But the ability to get those special provisions enabling you to get proceeds from the sale of your business into super, I think it's now about 1.2 million for people that satisfy 1.3 million.
Yep.
I stand corrected. So you need an accountant. So up to 1.3 million or thereabouts for people that sell their business, satisfy the 15-year rule, which means owning it for 15 years, and the other small business concessions, ticking those boxes. And that'd be per owner. So if there's a husband and wife, they could get potentially up to 2.6 million tax-free into super.
Correct. Yeah.
See, that's an extraordinary opportunity, and yet most people don't understand it. We would like to offer a review of your business with regard to succession planning. That's something that we do jointly with Butler Chartered Accountants, and we do have a specialist team to facilitate that. So, Damien, any final comments on succession planning?
Look, I suppose we've made the comments on value and how to maximise the tax side of it. I think the other parts to the succession plan is actually identify what is the succession process. Will it be an internal buyout by management, by staff, by other family members, and those types of things. So there's a fairly comprehensive range of issues that we deal with on that succession planning front.
Look, just one last comment on it. We've just currently have a project underway with a client at the moment where they look like selling at least 50% of the equity to an international company that wants to take a position in businesses like theirs in Australia. So it'll be a two-stage sale. Stage one early next year, and then the second stage in around 3 years. So it's giving them certainty for their future. So if you would like certainty for your future with regard to succession planning, please give us a call. Thanks, Damien.
You're welcome.